Imagine being able to look at a stock chart and instantly understand whether a stock is strong, weak, or about to move. Most beginners see random lines and candles, but once you understand a few key concepts, it all starts to make sense. In this video, I'll walk you step by step through everything you need to know to read stock charts in a simple and practical way. Hey everyone, welcome back to the channel. If you're new to investing or trading, learning how to read stock charts is one of the most important skills you can build. By the end of this video, you'll understand how charts work, how to read candlesticks, how to identify trends, and how to spot key levels like support and resistance. Let's jump right in. A stock chart is simply a visual representation of a stock's price over time. On the bottom, you have time, minutes, days, months. On the side, you have price. Every movement you see on the chart shows how buyers and sellers are interacting. When buyers are stronger, the price goes up. When sellers are stronger, the price goes down. So in a way, a chart is just a story of supply and demand. Types of stock charts. There are multiple types of charts, but let's focus on the two most important. 1. Line chart. Connects closing prices with a line. Clean and simple. Best for beginners to see overall direction. 2. Candlestick chart, most important. Shows more detailed information. Used by almost all traders. Helps you understand market psychology. From here on, we'll focus on candlestick charts. How to read candlesticks. Each candlestick represents price movement during a specific time period. For example, on a daily chart, one candle equals 1 day. On a 1-hour chart, one candle equals 1 hour. Each candle shows 4 key things: open price, close price, highest price, lowest price. How to read it visually. Green candle indicates price closed higher than it opened. Red candle indicates price closed lower than it opened. Parts of a candle. Body shows difference between open and close. Wicks, shadows, shows highest and lowest price. What candles tell you? Long green candle mean strong buying pressure. Long red candle means strong selling pressure. Long wick means rejection of price, important signal. Understanding trends. The most important concept in chart reading is identifying the trend. There are 3 types. 1. Uptrend. Price makes higher highs and higher lows. Indicates strength. Buyers are in control. 2. Downtrend. Price makes lower highs and lower lows. Indicates weakness. Sellers are in control. 3. Sideways range. Price moves between 2 levels. No clear direction. Golden rule. The trend is your friend. Always try to trade in the direction of the trend. Now, let's understand about support and resistance. Think of the market like a room where price keeps moving up and down. Over time, it starts respecting certain levels again and again. Support is like the floor. When price falls to this level, it often slows down or stops. This happens because buyers step in and start purchasing, preventing the price from dropping further. Resistance is like the ceiling. When price rises to this level, it tends to pause or reverse. This is because sellers step in and begin selling, stopping the price from going higher. These levels are important because they help you make decisions. You can look to buy near support and consider selling near resistance. Sometimes price doesn't stop at these levels, it breaks through them. This is called a breakout, and it can lead to strong moves. For example, if price breaks above resistance, it may keep going up. If price breaks below support, it may continue going down. Volume tells you how much activity is happening in the market, how many shares or trades are taking place. You can think of it as the strength behind a price move. When volume is high, it means a lot of people are buying and selling. This usually makes a price move more reliable because many traders are involved and agree on the direction. The move has strong support behind it. When volume is low, fewer people are participating. This makes the move weaker and less trustworthy because it can change direction easily without much effort. For example, if the price is going up and volume is high, it's a strong signal that the upward move is real and may continue. But if the price goes up with low volume, it could be a weak or fake move that might reverse soon. Imagine you're watching the market like the weather, constantly moving, never still. Prices rise and fall like shifting winds. And instead of reacting to every gust, you use simple tools to understand what's really happening underneath. First, picture price as a fast-flowing river. Wild, splashing, hard to follow. Now draw a smooth line through it. That's the moving average. It filters out the noise and shows the true direction. If the price is above the line, the river flows upward. If it's below, it flows downward. Simple. You just ask, which way is the river going? Now, think of the market as a runner. Sometimes it sprints too hard. Sometimes it slows to catch its breath. The RSI is like an energy meter. It tells you when a market is overworked or exhausted. Above 70, it's pushing too hard and might slow down. Below 30, it's tired and might bounce back. But here's the truth. These tools don't make decisions for you. They're just guides. The real story is still in the price itself. How it moves, where it turns, what levels it respects. So you use both together. The moving average shows the road ahead, and RSI tells you the speed. But in the end, you're still the one behind the wheel. Putting it all together, when you look at a chart, follow this simple process. 1. Identify the trend. 2. Mark support and resistance. 3. Look at candlestick behavior. 4. Check volume. 5. Use indicators as confirmation. This step-by-step approach helps you avoid confusion. Let's quickly recap. Stock charts show price over time. Candlesticks reveal market behavior. Trends tell you direction. Support and resistance show key levels. Volume confirms strength. If you master these basics, you'll have a solid foundation in trading. If this video helped you understand stock charts, don't forget to like and subscribe. Thanks for watching, and I'll see you in the next video.